Well, what I
right?
always ask myself is if the stocks aren't rallying when the indexes are rallying, and there's always going to be different outcomes, but
Yeah.
if they don't go up when the index, what's going to happen? We don't know what the index is going to do. It could just keep going on and on. But what's going to happen if the index actually does pull back? The stock that couldn't go up when it was going up, what's it going to do when it kind of backs up a little bit? So there's
No,
just
that's exactly right.
markets sit at all-time highs on the S&P 500, Nasdaq not too far behind. But today we're going to look at a bunch of news that really hit recently. There's news that came out with SanDisk, NVIDIA, and a whole lot more. Also, general market bonds have been particularly weak, U.S. bonds. So we want to kind of also take a look at some different viewpoints as we're mid-August. Markets have had some strong runs this year to kind of see if there's any cracks in the foundation of what's going on up here. Also, we're going to have some interesting discussions on win percentage and how reliable that is to kind of get you finding a proper strategy and a whole lot more related to the AI trade individual stocks. Welcome back. I'm Matt Caruso, your co-host, and I got my good friend Jason Shapiro here, back in the saddle, back in his office. Jason, how you doing?
Back in the saddle again.
We have to
Although
get
I'm
the
wearing a
we have to get the rights
Metallica
to the
shirt.
Aerosmith
Wearing
song
a
so we can play it
Metallica
over
shirt instead of the Aerosmith shirt today, but
the. My boys would be happy. So, talking about stocks, specifically AI stocks, which we've been talking about for months and months, going on and on about this kind of stuff. And we had a video when I got back from Italy a few weeks ago after situational awareness blew up. And we were saying, like, we don't know if it's too obvious, but this is like the perfect buying opportunity. Once the blowout happened, stocks had like a quick reversal. But we're a few weeks off of the bottom. And so a lot of the work we do, the point is to not be a perma bull, perma bear, any of that kind of stuff. So I want to kind of really start to point out something. Like, we understand like July was a liquidation event and all the rest of that kind of stuff. But we've had a lot of really, I would argue, is genuinely really good news. There was Anthropic coming out saying, I don't know if you saw that, I think their revenue is up 1,400% year over year, astounding growth. There was news of NVIDIA putting together a $500 billion consortium to raise funds to kind of, to fund the AI build out. That was mostly memorandum of understanding versus committed capital. Also, SanDisk had more information about, specific orders and floor prices and all the rest. So a lot of good news. But unlike kind of March and April, when we were really kind of zero in on that stuff, we were saying like, look, the indexes are down, these stocks are breaking to new highs. Like clearly there's like this super demand. Like everyone's calling AI AI bubble. But here are these stocks like leading the indexes. We have a really different kind of backdrop now. It's like, I know it's summer, general trends remain up. But, seeing that we're now maybe 3 weeks or so from that bottom turning point, and so many of the stocks are still having a hard time recapturing what they lost in July with the market at new highs. That starts to raise some warning flags for me. It's not necessarily a bear market, things are bad and all the rest, but just it's you have to at least start to be objective about the fact that leadership status has changed, not just because of a liquidation event. They've had 3 weeks to kind of rebuild, and so just given the amount of volatility that they still have, just starts to kind of push me more towards kind of like at least a neutral or cautious positioning for it versus being aggressive. At least that's the way I've been kind of building around it. I'm curious how you've kind of, we've been talking about this all this time together. Have you kind of noticed that a little bit as well? We can look at some individual stocks, some old lists from early July and how stocks are lagging, but I want to hear what your thoughts were and if there's anything you saw that stood out.
so, I was speaking for a while about how maybe the thing to do is look outside of AI, and the market was in fact doing that, right? As it turned out, we know why. But during
Mhm.
July, as those stocks and the Nasdaq was getting hit, the Dow was doing well, and suddenly, I started to see on my stuff that the Dow is the most crowded thing. I think I mentioned it last week too.
Mhm.
And since that happened, really now the Dow is starting to underperform. Um, Last week the Dow was actually negative, while all the other indices were positive, right? Um, so that's the main thing that I've been looking at is sort of the short Dow, long Nasdaq thing, because you see, yeah, we pointed this out last week, right? The
Mhm. That's
positioning
right.
in the Dow is a little bit out of control, whereas in the Nasdaq, what I've seen in positioning is that speculators have actually been selling into this rally,
Yeah. Yeah. Interesting.
right? So I still think long Nasdaq, short Dow is the trade.
Mhm.
Um, Not that you have to have that exact trade on, but essentially, if you're looking to be on the short side, Dow is a place to play the short side. If you're looking to trade the long side, Nasdaq is a place to trade the long side. Or you could have them both on, but and don't get it wrong. If the market's going to have a big down move, it's probably going to be led by Nasdaq, okay, because that's the most volatile stuff. And you'd be like, "Oh, Shapiro said Dow, and Nasdaq went down more. He's an idiot." I'm not here to fight the math of beta, right?
Right.
It's just from
Right.
a risk reward perspective, and you saw it last week. You made money short Dow last week. You didn't make money short Nasdaq or short Russell or short S&P. You made money only short Dow because that's where the crowding is, right? So, like I say, if the market's going to drop hard, Nasdaq's probably going to be the place where it goes down the most. But I still think the safer play, if you want to be short, is short Dow. That's the first thing I'm looking at. The other thing I've been thinking about a lot lately, because I heard another one. I listen to these podcasts a lot on AI because I don't know. I'm not an engineer. I'm not a physicist. I don't know a lot about it. So I try to listen to these things to try and understand it. Um, and again, are these people talking this because they're talking their book, or are they talking it because it's real? It's hard for me to decipher because I can't do the engineering. Uh, but I did listen to another one this last week, and I thought it was excellent. It was really probably the best one that I listened to. And it just continually keeps me a believer, right? Now, but what's going through my mind is, okay, so let's say AI is the realest thing in the world, and let's say AI is going to change the world and all that. Does that mean that the stocks still have any value, you know,
Hmm.
or have they
Hmm.
gotten ahead of themselves? That's obviously the big question here. I personally think that short-term stuff aside, I don't think they have gotten. The only way I can measure if they've gotten ahead of themselves is through positioning, and I'm not seeing a
Right.
positioning basis that they have. I still think there's a lot of people that think it's a bubble. I get this Korea note every week, and the guy noted that last week was some of the biggest retail selling in Korea that he has
Really
seen. Yes.
interesting.
So we all saw when right before Korea topped, we were pointing out the whole, you saw all this margin debt in Korea and how everybody was paying the 3-time ETF and all that. And it kind of looked like an accident waiting to happen. And the accident did happen. And now that it's rebounding, they're selling into it. And it's funny because I've sat here and said, I don't think that this market's going to top by people panicking into the buying it, right? I think it's going to
Mhm.
top as if it pulls back and they buy the pullback. That's what I've been
That's
looking
right.
for. Well, the exact opposite is what's
Yeah.
happening, right? Not only they're
Hmm.
not buying the pullback, they're selling the rally, right? So, which is why I say, like, this is what I'm looking for. I'm not predicting it's going to happen because I don't know what people are going to do. I'm just watching for what they do. But that's what it kind of looks like. So I just, it's not to say that these stocks can't go down right now or whatever, but I still think that that's the place to be long. I still
Well,
think that people are underestimating, by definition, from what I can tell,
hmm,
what this thing is going to become, because it's so hard to process, right?
yeah.
I mean, this guy was watching this week. It was on a thing called the Diary of a CEO podcast. Um, Guy's name was Daniel Kokutylo, and this guy knows what the hell he's talking about. A, B, he was neither a computer scientist nor a physicist. His whole background was in philosophy. So he was taking it from a point of view, if you have a PhD in philosophy, an undergraduate degree in philosophy, you're spending a lot of time thinking about the human condition.
Hmm.
And he was
Hmm.
taking it from that point of view. And he went through the whole gamut of possibilities, from AI is going to go crazy at some point and it's going to just eradicate the human race, all the way to the other side, which is, or this thing could turn into the greatest thing that ever happened and we could be living in, some kind of euphoric world, right?
Well,
Um,
that's the Elon Musk discussion. I like when he says, like no one's gonna have to work anymore, money's meaningless, but there's a 20% chance machines may kill us all. Like he says in
this,
his
this guy
admiral.
had it, this guy has that at 70% chance,
Oh, really? Wow.
just for the record. But
Hmm.
look, but again, I liked it a lot because, first of all, like I say, he took it from the human condition thing. Second of all,
Yeah.
it wasn't just all just doom and gloom. He was and he said, he goes, "Look, this is just me assigning probabilities, right?
Hmm.
Understand, there's no definites here, you know what I mean? They're just probabilities on how to see it." And, the main reason he thought it was dangerous was because and this was a guy who worked at, OpenAI and left,
Right.
because he didn't like where it was all going, and he started this thing called the AI Futures Project, and he wrote this thing called AI 2027, which I guess was pretty famous. And
Oh, that's
um,
right. I remember when that came out.
yeah, but he just thinks human nature, is dangerous for this type of stuff because even though what he found was he was not the only one that worked at OpenAI that thought there was a high probability of danger here, but they're not all going to leave. They're all staying because they
Mhm, mhm.
rationalize it by saying, "Oh, well, if I leave and I don't have anything to do with it, I can't stop that from happening." The Anthropic
Right.
guys will do it, or Elon Musk will do it. But if I stay, I can help OpenAI stop that from happening. But then, of course, that's just rationalization, right, for why they're staying. They're really just staying to make the money. You can't do it. I mean, if they're doing it, then we have to do it, right? It's an arms race.
Yeah.
And then that was his idea for why he thinks there's a high probability that it could go very awry. But that really wasn't the point so much. But my point being, even if that's going to happen, if AI gets so strong
Mhm.
that it kills us all, right? Between now and it being that powerful, there's a lot of work that has to be done, right? There's a lot of
Well,
chips. There's a lot of chips that have to be bought. There's
but
a
this
lot of
this is where, like,
electricity that has to be put together.
this is where I wanna, like, share some charts because this is I've been as bullish as can be for the past number of months. And Caterpillar's in the Dow, and Caterpillar's been one of the AI trades that build out and all. Part of not all of AI's Cat's move, but part of it.
Right.
And this is like a perfect example, right? This was one of the last stocks to peak on June 30th. And this was
Yes.
slammed down through July, bottom with everyone else, and just another good example. I think this is where it's nice. You can kind of bring both sides of the work together. You look at the positioning of the Dow versus whatever, and you can see how some stocks are lagging. And there's like a perfect example where the Qs are way up here. The spies have rallied way up to new highs. Even the Dow. If we take a look at the Dow, we're coming off now, but we were recently at new highs.
Yes.
And Cat's just been, I mean, we can't even, okay, this was earnings related, but we can't get even back above its 50-day moving average. Whereas similar to kind of all the other AI stocks in March and April, when the market was kind of, falling hard because of Iran, this wouldn't fall. And one of the first, I mean, this was back at new all-time highs on April 9th, way before everybody else. And so it just,
Yes.
it, that's the difference, I think, between trading and just kind of being blindly like bullish or just discussing like general long-term views is even along the way. I've been blindsided a lot of times where these were the leaders of the prior rally. That all that rally ends up being true, but there's new stocks that are going to lead the way, and the one that you had that was the leader is no longer, and you're stuck in like old merchandise. That's the whole BlackBerry Apple discussion all over again in a different spin, I guess you could put it. So it's just
Well, I
interesting.
think you make a good point because let's back up, right?
Yeah.
So, okay, positioning is saying that people are way too long Dow and not long enough Nasdaq. Okay.
Hmm.
Well, then maybe I don't want to be in the Dow stocks, right? I'd rather be in the Nasdaq stocks. Then you go
Hmm.
through and say, okay, which ones are leading and which ones are showing relative strength, and that's where. But your first screen is I don't want to be in the Dow stocks because Dow is the Dow is in danger here, right?
Right.
So there you go, catch a Dow stock. And look, if it were making new highs as the Dow was starting to lag, it'd be one thing, but it was doing
Exactly.
the exact opposite. This thing was lagging the Dow as the Dow was making new highs. This thing started to lag. So why would
Yeah.
you want to be in there given all of those things like the COT and the positioning? It's just one more data set that can help to put this puzzle together,
Well, what I
right?
always ask myself is if the stocks aren't rallying when the indexes are rallying, and there's always going to be different outcomes, but
Yeah.
if they don't go up when the index, what's going to happen? We don't know what the index is going to do. It could just keep going on and on. But what's going to happen if the index actually does pull back? The stock that couldn't go up when it was going up, what's it going to do when it kind of backs up a little bit? So there's
No,
just
that's exactly right.
it's just nice to kind of, and like you said too, when you start Crowd Market Report, you're saying it was a lot of, or a lot of the work you did there was kind of your own thoughts to kind of see what your thoughts were in real time and all the rest. And I think for a lot of us, that's similar. And I always keep all of my old stock lists, and you can go back and you can see some stocks that were just, this was an untouchable stock. For example, going from December into June, and this is a really, I mean, after the situational awareness blow up, you had a 3-day rally. We're yet to take out that high. Say same with something like a Flex. I mean, this is maybe a
Right?
little bit
Those
better,
don't
but
look
not all
those
that
don't look
better.
good.
So I mean, there are some obviously that are doing better. Like we could bring up like let's say
MU,
NBIS. NBIS is doing this, had really good earnings and a big. Funny
NVIS
enough,
has
what's his
been
name?
been a
Burry
monster.
was bearish this one. This had that really good report, but there's a lot of them like
Yeah.
Astera Labs, which is clearly even today got upgraded, sold into at the 50-day average. And
Yes.
so it's just interesting to see, even like if we bring up an Intel's still way off of its highs. Same with ARM.
Yes.
Same with AMD's better, but still not at highs yet, but better than the others.
Right.
So I always just try and check because I always say like my problem is I've hypnotized myself to be an optimist, but as a trader, that can work against you a lot of times. So I have to try and balance it back a little bit to neutral, and so that's
Yeah.
why relative strength with this comparative analysis, just like, hey, Matt, if like don't fall in love with the symbol. If all these build
I
out
mean, you're
companies,
not really being a pessimist. You're looking at the evidence, right?
right.
The stocks that were leading before when the market was in a great bull market, right?
Hmm.
They came down in July when all this stuff got hit, right? Now the market has rebounded a good way, and these things are not rebounding anywhere near what the market's doing.
Yeah,
They should be. They were the market leaders before. They should continue to be the market leaders. And if they're not, then you have to start to look more cynically at it. It's
yeah,
not, well, gee, they're lagging, therefore they're a buy. No, it's the
no,
opposite of that. I know that that's a temptation, right? Hey, all these stocks are going back up and this one's not. So let me buy the one that's not. That's the temptation.
hmm.
But that's the exact opposite of what you do as a trader, right?
Well,
Could
and
it
and
go back up later? Of course it could. Anything can happen. But if you're playing odds,
yeah,
it's really the exact opposite of what we always talk about. We always talk about you want to be buying the leaders. Well, therefore, if this thing is no longer leading, it's not the thing to be playing anymore. Play
yeah.
something better. Play that one. What was that one? Onto Innovation.
Yeah, these are some others. Yeah, that's why. I mean, if you look on
That
if
one
if
looks
you
nice.
ignore this one bar, you're basically almost back at your highs. Like you get to shortlist. You don't have to buy 100 stocks. You can choose the one. Like play with only the strongest. But I would say, like now off of that July bottom liquidation, we've had a really big push higher. And even remember Vico, we were talking about this here. This exploded higher, and this now broke, and this won't come back. So
Yeah.
you get to
It's
choose which
interesting
ones.
about how many of these stocks are not coming back. Actually, I don't.
Well, that's my
I should
that's my
know. I don't
worry.
look at individual stocks that much, but just it's interesting that you're showing all these stocks and they're refusing. Look at that one. Like that one right there was a monster
I mean, this
before the
went
fall.
from this went
Yeah,
from 30 to 80,
it was a monster,
quickly.
and now I can't
Yeah.
catch a bid.
Even some bigger ones, like KLA, I still call it KLA 10 Corp, KLA Corp.
God, these names. I remember these names from freaking '99, man. I had a friend that
yeah,
used to trade that one like a monster.
yeah, I know. It's funny how the old names came back, And there was some like Dell, which we had spoken about here on the podcast after we were saying like how this hadn't failed, and this did go to new highs.
Like, look at that one. That's the kind of thing you want to be looking at. That one
Right,
barely even came down when the market was getting
right,
crushed.
right. But just as so that's my concern, right? Because the issue though is so looking at the trade, and I'm always trying to kind of balance my positioning, right? Because I don't short, so I'm always either trying to be as super aggressive or I go neutral or conservative or cash, type of thing.
Right,
And the issue as well is if you look at a lot of these names, even Dell, look at how smooth the advance was, how small, how low the volatility was, like day to
right.
day. Like these, and now, if you want
Going
to
a little
play,
nuts. Yeah,
look at the size of the volatility. If you want to play now, so you have
yeah,
much less direction, you have much higher volatility. Most of the complex is lagging. The same. I know you mentioned positioning. I like to look at the VIX for like, kind of like crowded trades or not. A really good friend of mine I used to trade with for many years, my friend Harry. He would always put the Bollinger Bands on the VIX, and when it's below the lower band, it's usually like an area of. If it's the beginning of a bull market, you ignore it, but every other time, it's usually an area of concern. If you go back to let's say last year, every time you kind of get into the bands, there's at least some kind of pause. So, I won't go into all the signal, but there's a lot of, I started to see some complacency out there and then seeing so many of these stocks lagging. It's been a good rally off the bottom, even for myself, like I said, July was worse than I was anticipating. And to have some of that come back, it's nice to kind of reposition, but at least if you're going to position, make sure the ones you have are still leading. They're not lagging. So I just trying to
yes.
trying to be objective and you can see, that this one's lagged.
No,
Okay. Well,
it's a great time to,
reposition, right?
yes, to get out of the ones that whacked you in July. They've come back. Maybe they haven't come back all the way because they're the laggards by definition, but they're coming
Hmm.
back because the whole market's bouncing. It's a good time to now get out of those and look for other things to be in. I think it's like a gift, right?
That's it, and so like you mentioned too, you look at positioning. So it's maybe something like a cat. You want to stay out of Dow. So that's all. That's just kind of my point. I like to look at the VIX when I see complacency. That's always my warning sign. Like Matt, like how much exposure do you want right now, and are you in the stocks that are working? The ones that aren't, maybe just take the profit and run if you have a profit, or cut it short. And so that's kind of just where I'm sitting at right now. We'll see how it ultimately works out. Like
I,
I
I, I
said,
would I would also point out, because I know people like to, sometimes we wax philosophical a lot on trading, and people are like,
mhm,
"Can you give us more trading ideas?" The one that is the most crowded trade to me here, or at least one
mhm.
of, is copper,
Right. Okay, let's bring that up.
um, which is theoretically an AI trade as well. So we're told. And I'll just tell you that this is, again, no guarantees that this means, but this is the most crowded copper has ever been. This is the
This is a
longest.
pretty wild COT. I don't follow them as close as you do, but I've always looked at COT, and there's a pretty wild, wild COT positioning to see.
This is the longest that speculators have been in copper ever. Is that a weekly chart?
Yeah, it is. This
Can
this
you
is
pull up a
5 years.
daily?
This is 5 years. If I can go to daily
I can tell you can go back to the beginning of copper futures, and this is the longest speculators have ever been. Okay. But if you look at that reversal day there,
right here.
right there, yep,
Hmm.
that was on a day when there was some pretty positive news. Congo, who I think is the either the I saw the number 7 in there somewhere. They're the 7th largest exporter of copper, or they're 7% of the copper market, something 7 something. But they came out and were doing some form of export bans, not necessarily on copper, but I think on some kind of copper concentrate or something like that. And you can see on that news what the thing did. It gapped up, right, and made new
Tried to break
highs,
out, broke multi-month highs, and then
and then failed, right?
yeah.
So there's my news failure thing, on top of the fact that this is the longest they've ever been. And even this morning, right, you can see again the market gapped up and went up pretty well overnight, and this morning, as the Nasdaq was kind of and the AI trade was working again, and it was the first thing. It went negative very early this morning, right?
Hmm.
So it's failing, and the reason it's failing, obviously, is because everybody's long. Can there be more people? Sure, there can be more people. Can it go up through that high? Sure, it can go up through that high. But what I'm saying is, if you're looking to be short something in the AI trade, even if you're looking to hedge your longs or something like this to me would be my favorite AI short. It would be my favorite short, even not AI, but for an AI situation. And then look, it's like I always say, now you can go back, and I don't look at them, but the copper stocks were some of the big copper
Yeah, I
stocks.
was just bringing that up now on my other
Yeah,
tab here.
you
Can
know,
you see
that
the
would be the right.
right. Yeah, here's
Yeah,
Freeport, right? So
right.
FCX again
Everybody,
also failing to get to new highs. Yeah.
everyone loves that one. Freeport. I hear that one on
SCCO,
CNBC
Southern
all the time.
Copper.
Right.
This one's
So
lagged.
maybe you look at those. I'm not a huge believer that there has to be massive correlation between the stock and the commodity. You know,
Hmm.
I always like to, and I'm not the only one that says it, but if you want to trade the commodity, you trade the
Trade the
commodity,
commodity. Yeah.
right? You hear people all the time like, "Oh, I'm bullish gold, so I'm buying gold miners." Well, sometimes the gold miners outperform the gold,
Hmm.
and sometimes they underperform the gold. You know what I mean? If you're bullish gold, then buy gold,
Well,
right?
what did we learn from situational awareness, right? The imperfectness of hedges and spread trading, which can be tremendously dangerous. He figured, oh well, I like AI hardware, and I'm going to short software because they're the losers of AI, so I'll put on 400%. And then they didn't do it. They both didn't do what they were supposed to do, and he was blown out. So hedges can be quite dangerous because you tend to multiply size because you think you're hedged.
Right. Play the thing that you want to play. Don't
Yeah,
play the derivative. You know,
yeah.
that's what I think. So I know that you guys, most of you guys trade stocks and all that. So there's the copper stocks, but truthfully, there's probably an ETF, I would guess, on
I
copper or
just brought a
something you can trade.
COPX. I'm not a short. I
Right.
don't like the short anyways, but just to say,
Right. No, I hear you.
it's interesting though. Like even here, not only are we not back at like the June highs or whatnot, but we're not even above our August 12th highs. And if you take a look at that copper chart,
Right.
this also is off its recent
August
highs, but
6th.
this is
Yeah.
just clearly a stronger chart in copper versus the miners, and to see also the positioning. Interesting setup.
Right.
Geez, are
So,
we actually talking negative trades here, Jason? We haven't done this in a long time. I'm not sure if we're allowed to do this on the podcast.
well, I was super negative right at the low in April, right?
Yeah, we pivoted quick. We pivoted quick.
No, I did, but no one wants to hear that. They want to hear how wrong I was. That's what people love to talk about. So let's talk about that. But anyway, just my idea of something to look at in
Hmm.
terms of if you're looking to not be long AI or looking to hedge AI or whatever. There's what I think personally from the stuff that I look at, which is both positioning and market action, the combination. To me, that's the place to do it.
Yeah. No, I agree. And from my perspective, and I don't play the shorts. The reason I don't play the short, people say, why don't you ever short? Well, it's just it confuses my mind because then after, if things turn up, not only am I not looking at what's the best to buy, I've been focused on what was the worst, and the worst is not working, and now I'm missing the best because the best goes first. I just found that it's kind of a bridge too
Because
far.
you're
I'd rather do less and just focus.
It's because you're
Push.
smart. That's why you don't trade the short side. The short side is the worst freaking thing in the world to trade. I say it all the freaking time. I'm short
Mhm,
right now. Okay.
mhm.
But I'm telling you that it's I'm short the Dow right now because of my
Yeah.
my process gets me short the Dow. So it is what it is. But and particularly with individual stocks, it's even worse than shorting indices, and it's the worst trade
Mhm,
in the world. It's the worst trade ever invented. Why would you do it? Why not look for, like you say, why not focus on, okay, the market's going down, okay, but there's always something going up, right?
mhm.
There's always something showing relative strength. Even if you go back to the whole big bear market that everyone always talks about at 2000, 2001, there were plenty of stocks that went up during that time,
Yeah.
right? Why
Well,
not focus on those?
the asymmetry is all against you. You know what I mean? Like,
The most you can make is 100%, right?
I mean, even if you're right about a stock being overvalued, what are you a 30, 40% drop? I mean, like, but I don't want to say your upside's unlimited, but I'm just saying like
Your
risk
upside is
versus reward
unlimited.
is never,
No, you're never gonna make 400% on
right,
shorting a stock, right?
right, right.
Like you say, 40, you can make 100, I guess, if it goes to 0, but other than that,
I,
30,
I don't see too
40%
many
drop
stocks that
isn't.
peak and drop 100%. You know
No,
what I
there's
mean? Like,
not.
right?
No, there's
So,
not. There's not. So you're
yeah,
right, 30, 40% is a massive trade
yeah.
on a short, right? 30, 40%, shit, man, that's half a day in Micron. So, why just
Everyone liked your title, the movie, The Big Long. Everyone wants you to make it and wants you to star in it. From what I was seeing in the comments section,
the
Jason.
big
So,
long?
like you're saying, but you're right. If the amount
I
of
only get to
leverage,
star in that if it's a porn movie. So
well, we'll see. We'll see what the funding is for the
I
movie.
stole that from someone made that comment somewhere.
Yeah, I
So
know, I know. That's why I was laughing about it. But no, but the thing about The Big Short, why they made so much money, okay, is that they didn't the way they made their money is that they bought the CDSs. So they actually they went long. They didn't go short. They went long an
right.
asymmetric bet where they had a lot of upside versus downside, and they did that with a
Yeah.
lot of leverage, and that's why it was the big trade. But people, just trying to short the stocks is a much more difficult task, regardless of what it is and whatever the error is. And if you put that same, like you always say, if you put that same kind of leverage, like, like let's equalize this, compare apples to apples, same leverage in call options at the bottom of '09. Boy, oh
Yeah,
boy, it would have been, I think, a different, a better movie to watch. But
I mean, it
anyways,
wouldn't that's the point, though. It wouldn't have been a better movie to watch.
well, yeah,
It
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 would have
would have been a
been
better
better
trade,
return.
but it's not as
Yeah.
entertaining. That's the point. Look, it was a great movie,
Yeah. Well, I
okay?
love that
I
movie.
loved
It's a
it.
good
I thought it
movie.
was great, and I refuse to watch most Wall Street movies when they come out
Hmm.
just because, I live it like, the last thing I need to do, it's like I think it was Walter Payton said, "The last thing I do when I go home is watch football." You know what I mean? Like, the hell, it's like a doctor coming home from work and watching surgery on TV. So the last thing I wanna do is watch movies about Wall Street, but the truth is that was once I finally did get around to watching it, that was a great movie.
Funny enough, I saw this good documentary about Derek Jeter from the Yankees, and he was saying how A-Rod was such a
Yeah,
baseball addict. Like he would,
I saw
invite
that, yeah.
Jeter. Yeah, he would invite Jeter over after the games, and he would watch the game he just
Yes,
played like two times before going to
yes,
bed that night. And Jeter's
yeah.
like, "Come on, let's relax a little." bit, And he was, I mean, anyways, it's
Yeah,
to be
A-Rod was
great, you got
not
to have
about,
intensity.
he was not about relaxing. I saw that thing. It was that A-Rod documentary on HBO, right?
No, I saw this was I
Oh,
think it was like a Yankees thing about Jeter. They retired his
oh,
number on YouTube. It was like a 30-minute thing about Jeter, so it was
right,
good.
right, right.
Worth watching, but interesting. No, but but this brings up another point that I want to talk about because it's a bit of a pet peeve of mine. And you're saying how at the bottom of March you were bearish and you pivoted, but no one wants to hear that. And people want to hear about high win percentages, and I get this all the time. And for me, one of the number one red flags. Like I've been around professional traders a long time. I get to talk with you each week. You can read the Market Wizards books where they talk about stats and all the rest. So when I hear someone saying that, they're like, oh, this person I know, I've been following their stuff, they're right like 70, 80% of the time. And it's just because they're patient or it's just because of this. You know, um, Being right all the time is very difficult on a percentage basis. And especially if you are, chances are, just mathematically, your wins are going to be smaller than your losses. So, you get a lot of small wins every time a big loss. So if at any point your accuracy goes down a little bit, but you're trading very often with this small wins, big losses, you take a beating very quickly and your edge is destroyed very rapidly. So I just want to kind of just touch on this because I would like to hear your thoughts too. But it just really irks me because I think people will view like, oh, you have a 35% win rate, like, oh, you don't really know what you're doing. Come on, just try and juice it up to 45 or 50 and you'll make so much more money, as if like I'm purposely trying to be inaccurate when buying something. But curious what your thoughts are on win rate. I find when I hear someone talk about, if it's a YouTuber or something, if I hear high win rate, it is red flag number one that goes up, flare up in the air if you're talking like 70, 80% win rate. But just curious what your experience has been with it, Jason.
Yeah, you know what I'm gonna say, man. It's a huge
This
pet
is like,
peeve.
if
I
it's an
mean,
old
look,
computer, it would say ramp
let's start
loading.
with me. Let's start with me being, a conceited, cocky jerk. Okay, my win rate over time is 38%. All
Hmm.
right, I will challenge anybody to go out there and find somebody who has a 20-year track record, with a return to drawdown that's better than mine.
Hmm.
I'll challenge anybody to find someone that has that. Okay, um, because my return to drawdown is over 3 to 1.
Hmm. Hmm.
It's almost impossible to find that. Um, who might have that? Stanley Druckenmiller might have that,
Hmm.
and Stanley Druckenmiller will tell you every single day, every time he does an interview, that his win rate is way, way below 50%.
Yeah.
Okay, so let's start with that, right? Who are you going to listen to?
Hmm.
You're going to listen to Stanley Druckenmiller, Bruce Kovner, the legends who have put up awesome returns over time, right?
Yeah.
Over long amounts of time. They will all tell you that. Paul Tudor Jones, they will all tell you that, right? That their win rates are very low. Or you're going to listen to this jerk off on YouTube who tells you that his win rate's 90% and probably doesn't even manage any money, right?
Hmm.
Is selling a service, right? You make the choice. Okay. That's my first comment, right? My second comment is familiarize yourself with the concept of martingaling, right? Martingaling has an incredibly high win rate, right? Martingaling is like what you do on a roulette table. Bet red. Bet $1 on red. You lose. So bet $2 on red. You lose. So bet $3 on red. You lose. So bet $6 on red. You win. You got your money back.
Hmm.
Okay?
Hmm.
So theoretically, you always get your money back, but the first time you go on red and it comes up red, you get the win. So you're either winning or you're martingaling down and getting your money back. It's one or the other. You're either winning or
Hmm.
coming out even, winning or coming out. Huge win rate. Okay. But the problem is there's going to be that one time where you run into 9 blacks in a row and you go broke, because
Yeah.
that's why, by the way, they put table limits. Why would a
Right.
casino put a table limit? What do they care how much you bet? The more you bet, the more they're going to make, right? They specifically put table limits for that reason right there. You run into the table limit at a certain point, and now you can't martingale back, right? So
Hmm.
martingaling is the perfect example of high win rate that is eventually mathematically going to bankrupt you, right? And it's the same thing with people that have high win rate trades. By definition, a high win rate. Here, I buy something, it goes up a penny, I take it, I won. I buy something, it goes up a penny, I take it, I won. I buy something, it goes up a penny, I take it, I won. I'm 3-0, 4-0, 5-0, I'm 8-0. I made 8 pennies in a row. Now I buy something, it goes down 40 cents. Okay. So now I made 9 in a row, 9 out of 10 trades. I made $1. I made $9. And the 10th trade, I lost $40.
Hmm.
Hey, but my win rate was 90%, right? And by
Yeah.
definition, that's how you get a high win rate, is by taking small losers, right? Uh, that's how you do it, by taking small winners. I'm sorry. And that's the
Yeah.
exact opposite. We know, damn, and everybody will tell you that's the exact opposite of what you want to do. Everything you ever hear, it's about you have to take small losses and you have to ride big winners. High win rates are exactly the opposite of that,
Well,
right?
and the
I
thing
can
is,
have a win rate of over 60%.
hmm,
All I have to do is the exact opposite of what I do now.
yeah.
I'll win 60% of the time, 63% of the time, and I'll lose 37% of the time. And my win rate is now almost double. And my returns will go from positive and great risk over risk reward to negative, but my win rate will be higher. Like, what are you looking to do here, right?
No, but
It's
I
all
think
about you,
there's so many
and it's all about
pitfalls.
sales. Win rate
Yeah.
is all about sales. These guys that can say, you see them all the time, right?
Hmm.
Hey, our win rate's 90%. There's a one guy, I'm not even gonna get into his name, but we have a lot of people on our Discord who have left him and come to
98%
us.
win rate.
Yeah, he always says he has like a 90% win rate and all that stuff. We have I can't tell you how many dozens of people on our Discord that said that they paid for his service and he blew out and not even at the same time. They all were over the 5-year period. Oh, I was on his service 4 years ago and he had an 80%, 90% win rate, but he blew out. He blew out here, he blew out here, he blew out here, he blew out here. But he advertised this 90% win rate because he never takes his losses. So it's 90% win rate on closed trades,
Yeah,
right? So
yeah.
he makes $1, he closes the trade, makes $1, closes the trade, makes $1, closes the trade. Thing goes 40 times against him, 40 bucks against him. He just doesn't sell.
They're
So he
not
doesn't have to
closed. There's still a
right. So
chance.
it's not closed. So it's not it doesn't go into his win rate because it's a win rate on
Yeah.
closed trade, right? It's a scam, man. You have to avoid it. I
Well,
mean,
the thing is, like, so, and I was like a market maker and all that stuff. Like, we had like a genuine advantage of how we could trade and the speed and all this stuff. This is even before like the HFTs and algos took over. And so, we would trade all day, every day. And even at that, like when I would look at the end of the day, we'd have like our direct market access terminals. And like, I would see like at the end of the day, I traded, X number of million shares, but my profit on the net was like, a half a penny or something like that, like really small because you're in, you're out, you're all this stuff. But like people have to understand that what they like to do is they like to have a high win rate and trade more often. So they say, I have smaller wins, but I trade more often and all this kind of stuff. You have to realize that if you don't have, especially intraday, a specific advantage, or unless you're incredibly, incredibly good, I'm sure there's going to be a few out there that are just like outstanding people.
I don't think
The
so.
the 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 game is it's a negative sum game. There's the cost of the spread, there's the cost of commissions, there's the cost of random news and volatility that's going to hit you. So there's just so much tilted against you that if you're going for high win rate and your wins are smaller than your losses, if that edge that you think you have, which may only be alive for 6 months because you were in that certain trend where that type of process worked, the second that edge erodes a little bit because you're trying to trade so frequently to make up, bigger money, is you take such a massive drawdown that will blow you out so quick you won't even recognize what happened. And you've been so dazzled by 6 months of like, oh, I just win all the time. Like it's gonna come back that you're gonna bring yourself right to zero before you realize something broke.
I mean, it's just another on the long list of things that I will say, and that people will just say, "Oh, I'm just some cynical freaking boomer, and I don't know what I'm talking about." Don't do it, man. You're gonna lose money. And this idea of, "Oh, I want to trade more. I want to trade more." Look,
No.
trading more. What do they say? It's a great way to put your kids through college, but it's your broker's kid that you're putting through college, right?
Yeah.
Like it's not going to work. But by all means, go ahead and do it because that's the only way you're going to believe it. Me. You're
Yeah.
not just going to believe me. Just like I wouldn't believe me. Well, you know what I mean? But I'm just telling you for your own good, but you don't have to listen to me. Every
No, I
time
mean,
somebody your dad used to tell you stuff for your own good too, and that was the first thing you wouldn't listen to, but
no, but I
it
mean,
ain't it ain't gonna work, that's all I'm
people say,
saying.
well, how come the HFTs or the algos can, I could figure it. They have technological advances that cost
Yes.
billions of dollars. I'm not gonna go
Yes.
to the whole discussion of order routing and the
Right.
actual time it takes to go from one ECN to another. But I
Right.
remember we used to have like we had direct market access. We had a direct line to the exchange. And when this HFT started, I remember like, hey, I would go lift the offer and I would be second on the bid because these other guys had a way of kind of circumventing through literally like a thousandth of a second that they'll be in front of you.
Yes.
And that's what it comes down to. And
Yes.
this was like, years ago. Now it's only, so they have an actual technological advantage. Before it was being on the floor, you had
Yes.
to have a seat and be there in person. Now it's a virtual technological advantage, but they have one. So
No, and if you have that, then by all means, but then
yeah,
that's
but you
gonna
have a couple
cost you
billion dollars
100,000,000
and you can
freaking
set
dollars,
yourself up,
right?
but it's,
I
yeah.
mean, what's his name, had that, um, and who's the old guy that was the professor at Stony Brook, and he died recently, and can't believe I can't remember his name, it's so stupid to me, but, they had it, and they made their fund was amazing, right? Um, but they had an office in Jersey City with a high-speed line, you know what I mean?
Oh yeah, Jim Simmons. That's right.
Yeah,
Yeah.
Right? Simmons did great, but they had
You
that
technologically
technology
cannot
advantage.
beat them. You
And
cannot
then
beat them.
his he had other funds, by the way, trend following fund that did crap,
Mhm.
where it had nothing to do with the technology. He was just as smart. The guy was a genius, okay? He was just as smart running his trend following stuff or whatever he was running as that stuff, but that stuff made money each and every second because he had like the technology
And
advantage,
this is why
whereas his
15
other stuff didn't, right?
And this is why
So
15 years ago, you're hearing everyone on Wall Street, they were hiring physicists. They weren't hiring finance grads anymore
right,
because it wasn't
right,
about solving finance. It was
right,
about solving this, things were changing to these more advanced methods of trading. And it was
right.
about solving the actual physics of getting the orders there in front of other people. And so, anyways,
The thing that makes me laugh all the time is when they come out with Goldman Sachs, right? They come out with their earnings and all that, and they say like, "Oh, well, Goldman Sachs made
trading,
money. Yeah, their trading P&L was positive. You know, 8,000 straight days in a row, right? Okay,
that's not
because
trading anymore.
they're buying on the bid. You know what I mean? They're making markets, right?
Yeah.
They're buying shit on the bid all day and selling shit on the offer all day. They're getting the good side of the things you're talking about, right?
Mhm.
The commission and the
And they're so
spread
rapid,
and all
they
that.
they'll pre-buy order flow. So the order comes from TD Ameritrade, you send their order, they
Right.
have full view of the book and everything and the
Right.
fastest speed. So the order comes to the bid, say, "Do I wanna buy this or not?" And if they think they can flip it for a penny, yes, they'll buy it. If they do and the market changes, they turn around, they sell to the next guy who's not quick enough to cancel his order, and they get
Right.
out flat, and they pay
Right.
almost 0 commission because they own the house and all this kinda stuff.
Right.
So
Right.
they run the system, which, we used to do it too, but obviously at a much smaller scale. 0
Right.
plus. I'm either going to try and break even or I'll make a penny. Try and break
Right.
even and do
Right.
that a billion times, and it's a good day's work. So
Right.
that's what's going
If
on.
you're a market maker.
And you have that kind of technology. So I'm saying people are saying you're going to sit there and make decisions, but be right 80% of the time.
Yeah.
I think you're looking at trading, actual real trading, the wrong way. Personally.
I mean, why not do this? Have a process that makes you money when you're right 35% of the time.
Hmm.
And then slowly try to keep within that process. I mean, admittedly, this is actually what I do, right?
Yeah.
Try to
Same.
keep within that process and try to get that 35 to be 38
Hmm.
and see how that goes. And then get the 38 to be 42 and then get the 42 to be 50, right? This is actually what I do over time. And what I have found is what's happened to me the last, let's say, 3 years, certainly. My win rate is actually going up slightly over the last few years. You know why? Because the
Your
amount of trades I'm taking
trade
is going
frequency
way
went
down,
down. Yeah.
because I'm learning as I go. I'm like AI, man. I learn from my own stuff. I learn as time goes on, right?
We're gonna
Like,
recreate you, Jason. We're gonna spell it
there you
JAISON.
go, JI, because I'm learning that, hey, let's look at these winning trades and let's look at these losing trades and let's keep learning from each one and seeing what we could have maybe avoided or done better. And so, yes, my win rate percentage is it's not going from 36 to 86, but I'm getting close to 50 now, but that's because
Yeah.
I have less trades. And of course, what that means is I'm also missing some trades that were winners before because
Mhm.
I'm not being as strict or as loose, I would say, with the process as I used to be. So I'm avoiding some more losers, but I'm also avoiding a couple big winners. I mean, there's a trade-off to all of it, right?
Well,
Uh,
that's the point, right? Because I think people can think that they can just bring up their win percentage, but keep their trade frequency, their trade size the same, and all the rest. Like I feel if you want to try and freeze those variables, but increase your win percentage, look, again, you're always looking to improve yourself. But I just want to I
Yeah.
want people to understand it's the same as like a car against wind. If you look at cars going 200 miles an hour, a lot can do it. Only so many can go at 210, then so many at 220. Then everyone's fighting for like 2 miles an hour extra because the impact of the wind at that speed, like the incremental gains are so difficult when you start to already get to like a high level. So,
Right.
anyways, that's the way I
No,
look at it.
it's the single worst, I would argue, trading statistic that you could ever think about.
Yeah,
Win percentage. Single worst thing. And it'll suck you in and spit you out. So that's what I would say. Don't do it. Don't chase that. Peter Brandt says it all the time, right? He says
yeah.
it all the time. It's the single worst trading statistic that you could ever judge yourself on.
All right, Jason. With that, if everyone enjoyed the talk and you want to learn some more about the realities of trading, you can subscribe, like the video, follow us here. You can see my good buddy here, Jason, at crowdedmarketreport.com. You can visit me over at carusoinsights.com, and I'll be back again next Monday, and we'll see you then. Thanks so much, Jason.
All right, man. Thanks.
Thanks.